what happens at the end of like global growth cycles? You have global geopolitical conflict. Generally, I fade a lot of these geopolitical things, but this one feels like the culmination of, I don't know, 40 years of geopolitical decisions that are all coming to a head.
All supply shocks kind of start like this. But the question is, how long does the disruption last? It's not, I don't think, prudent to say, oh, S&P isn't down massively, so the war isn't a big deal, or going to be done in a week. Because I think there's a lot more at play.
Feels like the market is still not fully there in terms of accepting how long this crisis is going to go on. Before we get started, a quick reminder that Blockworks' premier institutional conference, the Digital Asset Summit, is returning to New York City this March 24th to 26th. This year represents more than $4.2 trillion in assets under management, with 150 speakers and 750 institutions attending. Speakers include SEC Chair Paul Atkins, CFTC Chair Michael Selig, Fed Governor Stephen Moran, and Tether CEO Paulo Ardonio, alongside countless other executives, asset managers, regulators, and the core crypto infrastructure builders shaping the industry. If you want serious institutional grade view of digital assets in 2026, Digital Asset Summit is where it happens. Use code FORWARD200 for $200 off and head to blockworks.co/events for more details. Nothing said on Forward Guidance is a recommendation to buy or sell any investments or products. This podcast is for informational purposes only, and the views expressed by anyone on the show are solely their opinions, not financial advice, or necessarily the views of Blockworks. Our hosts, guests, and the Blockworks team may hold positions in the company's funds or projects discussed. As always, investments in blockchain technology involve risk, terms, and conditions apply. Do your own research. All right, what's going on, everybody? Welcome back to another Roundup edition of Forward Guidance, Geopolitical Monitoring the Situation edition. As we said for a few of these, we are just three dudes who are not in the situation rooms. We don't know what's going on, but we're going to try to do our best to try to figure it out. What's up, guys?
Feels like Friday. My tiredness levels indicate such as well. So, it's been a big week then.
Yeah, it reminds me of like April Liberation Day on like Friday, that roundup we recorded, and both of us, we were just, I don't think you're in it, Tyler. Maybe that was, I forget when, but I just remember both of our eyes, like our bags were just, we looked zapped. I feel like that today too.
I totally feel like that. Yeah. Quinn's Hispanic haircut's coming in quite nicely.
Yeah, bro.
Oh yeah.
The flow is
it's coming. You can't even see it anymore.
I'm glad you approved, Dad. The arbiter of fucking style.
Yeah.
Tyler Neville.
As long as he blesses it, we're good.
I wear my shitty New Balance sneakers when I mow the lawn. And my jean shorts.
Love it. All right, before we get into it, quick little shill hit here. Digital Asset Summit 2026, New York. Prices are going up tomorrow, so get your tickets. It's going to be awesome. Yeah, we got a star-studded lineup. Don't need to say it too many times, but you know the drill. We got, Paul Atkins, head ACC, Stephen Moran, doing a fireside chat with him. Whole whack of people. It's going to be great. And use your ticket, discount code, FORWARD200 for $200 off. So, yeah, happening in a few weeks. Prices are about to go up. So go get your tickets before it's too late. It's going to be a good time.
Felix, I saw you're interviewing Raul and Dan Tapiero, which is...
Oh, yeah.
That's going to be epic. I mean,
dude, I'm looking forward to that one. Just a couple of old macro salty dogs. It's going to be a good time. I love it.
There was an interview that Dan and Raul did when I was at Real Vision years ago, to give him a shout out, which was so prophetic. It was one of Dan's first Bitcoin interviews, and he absolutely tattooed that thing. And I bet if you watch it now, it probably aged like fine wine, but you should go back and watch that one before you interview them, because it's got just absolute gold in it.
Two stories that stood out to me about those guys is one, Dan's basically when he ran back with Bitcoin and crypto, what he did with gold when he saw he was super bullish on gold, and so he set up basically this whole gold business back in the day. Yeah, the one with Raul that always stands out to me is when he was super bullish US dollar relative to everything else, and basically sold all his properties in Europe, bought, real estate in USD denominated assets, Cayman, Miami, etc. So he was forced to own dollar assets. those are like
macro.
those are
Yeah.
the type of macro trades that can set
Yeah.
you up for life. Obviously they're both super wealthy people. They've done really, really well, very successful, and have different probably levels of wealth. But for the average person, you hit one or two like big bets like that in your life, and you're probably pretty set.
Yeah.
Pretty sad
I
for
mean,
sure.
not to, in that framework, that's part of the reason I moved from San Francisco to Texas was Mark Hart. We were down in Cayman Islands with Raul and doing not pumping real vision a little bit, but yeah, it's a growing pie. It's growing pie. But when we were there, Mark Hart was like, there's a giant arbitrage here, and Mark bought a bunch of Texas Austin, Texas garbage companies because he was like, you're just going to get a massive influx of people into Texas. And I think Austin's going to be the place. And then now in 2019, I ended up moving before the giant California exodus. And it was life changing in a lot of senses if you can get one of those big macro trades right. And I don't know, there's going to be plenty more of them coming with this is the World Series of macro right here. If you don't get blown up, man, you're gonna have some unbelievable opportunities.
You got permanently adopted in the boomer class, Tyler, when you bought a house that's quadrupled in value at a 2% mortgage. So
yeah,
you're like
that's
the
one of
last
them.
telly out,
that might be coming. Hey, my house could dive by half, 50% right here. We never know. Price is a liar. Price is an equilibrium liquidity.
Let's get into the goods. Like I said, we're this is a monitoring the situation episode. We're trying to figure out what the hell's going on. Yeah, I mean, for those who live under a rock, the US and Israel striked Iran, whole bunch of stuff going on. And yeah, let's just try and piece it apart, try to figure out what the hell's going on and how to even begin thinking about it. Like, obviously we're not the people in the war rooms, like I said, so impossible to really predict, but at least start to figure out what's going on. I'm going to run through a couple of oil charts just to get us on the same page, and then we can jump off from there. So oil vol surface, not surprising, is just absolutely skyrocketing. So this is a tweet that Danny put out earlier today, just looking at the oil vol surface, is at the most extreme stress since 2020, even more than 2022. So this is the 2-month, 6-month vol ratio. So just to say that volatility is here. This is looking at the front month to the, I forget which contract, a few months later. And so it's just been really interesting to look at how different parts of the forward oil curve are reacting to this situation. And so far, it's been most acute and elevated in the front months. And it feels like the market is still not fully there in terms of accepting or coming to terms with how long this crisis is going to go on. And I think that's going to be the consistent theme here. Is we all know what's going on today and what's going to be going on for the next week or so, probably in terms of just the acuteness of the situation. But I think a lot of what's priced in the markets right now, and why we haven't seen any like true vol clearing event, is because everybody's holding their breath to see how long does this really shake out. So you can see in the WTI crack spreads, that's been surging like crazy. The Brent 1-2 time spread has been surging like mad. I find it really interesting. A lot of the really acute moves are happening in these more derivatives esque components of the oil market, less so than just the absolute. I feel like if you heard the headline that like the Strait of Hormuz or whatever is going to be closed and all this happening, you'd probably assume oil's above $100, but it's not. It's like just barely breaking 80. But under the surface, hopefully these charts hit home about just how much is really still happening. So oil volatility index as well, just absolutely surging, insane. And this is just looking at all the different parts of the curve as well right now. So you can see, like I said, the front month is where it's really happening because Strait of Hormuz, almost nothing's moving there right now, and feels like it's more this length in terms of instead of acuteness is really the tension in markets right now. That's what I'm reading from this. I'm curious how you guys are thinking about it all.
Yeah, I think that so the other component that you have when these big spikes happen is producers who have modeled out their price estimates and assumptions and influence their capex and drilling plans go out to hedge 2, 3, 4, 6, 8 months out because they can actually turn on more production for those later months. So that also pressures the back end of the curve. And then you have all the speculators, piling into the front months as well. Like most of the activity from retail and, fast money speculation is going to be centered around the front end of the curve. So we saw this in the Russia-Ukraine war as well. All supply shocks kind of start like this. But the question is, how long does the disruption last? And, you could very well have a situation where the front month contracts come down markedly, but the back end also don't go down that much, just in the way the front month went up a lot and the back end didn't. And so everyone's trying to figure that out. But I think coming into the weekend, like one, you have a big part of the market conditioned to like this nothing ever happens idea where, maybe there was going to be a strike, maybe there wasn't, but it's going to be super limited. And then you have people who kind of are super frightened and hedged, put skews very, very high. There's already been a lot of de-risking in some of the market generals as they haven't gone anywhere for 4 months. So there's totally different, let's say, approaches and positioning across investor cohort. Retail's buying the dip at record highs, like as much as they were in October, which is hard to believe because all the retail charts look like garbage. And so when you put that data up against that, you're like, there's a divergence here that's not healthy. And then you have the smart money, de-risking out of Mag 7 and the hyperscalers, and taking their nets down. So I think there's also a lot at play here with options expiry and the hedging. So it's important to not read too much into the chop, into things that are market structure related and not actually, war. Like it's not, I don't think, prudent to say, S&P isn't down massively, so that the war isn't a big deal, or
Yeah.
it's going to be done in a week. Because I think there's a lot more at play.
Yeah, I think just a good example of that whipsaw from just positioning is just the spread between Brent and WTI. Typically, in this situation that we're seeing right now, you'd expect, and you saw it initially, this premium on Brent being more closely associated with the price of oil in the Middle East versus WTI, which is more Texas landlocked oil. So it would make sense right now with what's going on to see that substantial premium, and we have been seeing that. But then you've seen the last couple of days, it's just been this like total positioning unwind of this spread. So maybe one person can look at this and be like, "Oh, look, it's applying some sort of resolution to this premium," or it's just a speculative unwind. It's just more sellers and buyers and that sort of thing. So I think that's just one example of just this whipsawing nature while we're all trying to figure out what the hell's going on. Tyler,
Yeah.
what's your read on this whole thing?
I'm getting a little bared up here, and I know my mantra here has been I'm so bearish, I'm bullish. And I think I don't know how fast you can fade this conflict. There was some headlines today about China influencing Iran to keep the Strait of Hormuz open, which kind of capped oil and had a bid to risk late in the day. But I think I just want to go through a couple charts here, which I'm watching macro wise. If you hit me with a 51 to start. And so this is the 2-year inflation break even. This is going higher, obviously, with oil, but this is something to watch because if this keeps going up, the Fed easing is the probability of Fed easing goes down, and that's one particular. And then just keep going through. The next one, this is oil vol. Obviously, we showed this before, but it's pretty extreme. These things generally are faded, but I don't know. This one's a little tricky for me. Not that I'm an oil expert. Generally, I fade a lot of these geopolitical things, but this one feels like the culmination of, I don't know, 40 years of geopolitical decisions that are all coming to a head. I watched one video, one podcast from this professor who's predicting like Iran has the potential.
I was looking at his videos this week too.
And it was like, he had 2.5 million views on it. And I was like, that's kind of interesting. Like this is a, diametric, different take. And so I watched some of that, and he was kind of just saying they've been preparing this for 20 years. All of our infrastructure is like World War II based defense infrastructure. I don't know how true that is, but this guy was basically saying it's going to be longer than we think, and the timeline can't be a couple days or weeks. So that's why I don't really want to fade oil right here, and then keep going. There was another guy, Anaji.
Anas Al-Haji, yeah.
I can't say these names. I mean, clearly an oil expert. It's basically saying, like, even if you stop the conflict right today, you'd still be in a supply crunch for the next like couple weeks, regardless, because of the backup. And so this is Citigroup's, basket of airlines that broke the 50-day. It looks like you're basically almost have no support for a while. So as oil goes up, where airlines go down, keep going. This is the JP Morgan FX currency volatility basket. This is turning up, which, first you watch, FX. If FX is breaking out, that means a lot of funky things are happening trade wise. And this is correlated with, the next chart I think is CDX on high yield or credit spreads. So these are the things that make me a little concerned when you see this blowing out. When you see FX vol and there's this massive carry trade, and then you see credit vol, this potentially has, carry trade unwind if this blows out higher. The thing that's different about this specific geopolitical event to me is it's got everybody involved. Like Iran, you've already cut off Venezuela oil. You already cut off Iranian oil for China. China came out, said they're lowering GDP estimates. And what happens to China to gain leverage over the US if they're not getting their energy from the sources they are? They go and take Taiwan. There's all these like things of uncertainty are growing here. And if you're a giant geopolitical capital exporter, maybe you repatriate that capital home, which is why I think we're seeing credit spreads kind of widen a tiny bit. It's enough to be concerned and keep going. This is the JP Morgan emerging markets currency basket. And so this is like, 20 years of currency. So when this rallies, that means money is leaving the US and going to emerging markets. We immediately hit this monthly downtrend line and are reversing lower. And now the dollar's rallying again. So what we're seeing now is US dollar is rallying, emerging market currencies are selling off. This is like the dollar liquidity crisis, and credit spreads are widening, where like dollars and gold go up, there's liquidity problems in the system. So keep going. And I'll stop talking. This is the Euro Swissy. When you see this moving lower, like all the oligarchs are moving their money into Swiss bank accounts, right? So we haven't seen a true spike, but all these things are showing you like liquidity is not great. And keep going. I think there's one more. Oh yeah, and the private equity guys. So obviously, private equity is where I think all the bodies are. And there was one headline that said BlackRock just marked one of their loan books from 100 cents on the dollar to zero. We've obviously seen problems with Blue Owl. We've seen a lot of other funky issues in private credit. And one of the things that's interesting is like when you try to get, what do you do when you have crappy loans on your books? Is if you can't hit the bid on the illiquid loans, you end up selling the good stuff. And I think we're probably in this cycle, unless the Fed comes in, if you get the Ponzi scheme play coming back. But it's really hard with the geopolitics the way they are in oil rallying like this to have the Ponzi play come back into the mix. And so I'm very concerned here. And I don't think you play for like upside risk, let alone like we're watching bad earnings get pummeled. One interesting thing is, there was a quantum computing stock that came out, $5 billion market cap. They only have 1 million of revenue. That's basically like what our podcast does. Yeah, they have a $5 billion market cap. And so you're like, you're, I wish we had that valuation.
Oh yeah, I wish we were.
And it finally got pummeled instead of it did rally because it's all
Yeah.
the story stocks. Like in a bear market, bad news gets absolutely hammered. And so these things are really hard to unwind. And then let alone, this is the last thing I'll say. One thing that's really interesting to me is like the one thing we haven't seen is hedge funds degrossing. And so the market structure for the past 15 years has basically, because of the legal costs of running a hedge fund, they've made these mega platform funds even bigger and bigger and bigger. And what the implicit backing of the government has done has given those guys basically like free, ticket to the just like banks to lever up and make money. And it's kind of the games. This is why the game's just completely co-opted. But so these mega platform funds grossed all the way up, and then they're consistently getting bailed out by government policy. And today was really interesting because we saw software rallied really hard after everyone had insane put skew on the software sector, and staples fell off at the same time when everyone was like balls long, call options on consumer staples. And so that unwind, when you get these like unwinds from sectoral things, that's usually a sign that the multi-platform funds are delevering or degrossing. And so we'll see if that, when you get these wobbles in market structure and that the big players are probably, there's some problems at them, you got to watch out. And the VIX is not mean reverting. Like that's the other thing. The VIX is trading like a stock, almost like because all the CTAs are now like, oh, VIX goes up, delever, VIX goes up, delever. So we're in this. And the other thing is the buybacks aren't there. Previously, when you have buyback open season, these things were a lot bigger relative to the floats. There was a lot of government policy backing it. So all of these things that we call the Ponzi mechanism are not in the market right now as much as they used to be, which is making me like, just don't. This is a time for being conservative rather than shooting for the moon, and you'll have a better chance, I think, to scoop some on value. So I'll shut up now.
That was awesome. Yeah, I agree. Like, it's just not the time to be a hero right now, I think. And like, there's so much. I think so. I put out a piece to you guys a couple days ago that Scott Rubner wrote at Citadel, and he was looking at just in a few weeks, this March 20th expiry is going to be like a triple witching and largest OPEX in history. I feel like that happens every year just because the numbers go up. But I think the fact that like if you look at historical precedents of when these big vol events happen, it always feels like it has something to do with the March OPEX. And then it's this like triple witching one. And so you have the situation right now where all the bears are hedged up and they own their puts at the same time that, there's people going buying the dip and knife catching, not even knife catching, buying the dip on the nothing ever happens trade, taco trade. And I feel like those are going to be at odds for the next couple of weeks, potentially until that OPEX. And then I think you might see something. So you're in this sort of holding pattern at the same time too, that we're all trying to wait out and see how long is this crisis going to take. And I think by the time, if we get to March 20th and it's still looking pretty bad, I think that's where you can start to see that move. And then you add on the fact, and another leg of this too is just like, the big winning trades of the last 12 months have been dollar bearish trades. Like everybody's been loaded up on precious metals, on gold and everything. Like it's just been having this insane time. And if you get one of these classic dollar wrecking ball, flight to dollar scenarios, that's going to test a lot of positioning.
Yeah. The hard part is thinking that if you look at the ISM numbers that were better growth and lower prices, it's really hard to reconcile. Like there's secular growth in some areas, and then there's like complete disruption in others, but you never really know when the rug gets pulled. And I think we're in one of those little, I guess, like pockets where you risk is high here, and I'd rather be a conservative of capital here than very very risk forward.
How it feels to me is that there's just no meaningful sized buyers of the market, and so because everybody's and there's a lot of reasons why there should be this overhead supply. I mean, coming into it's very easy in these events to get super zoomed in on oh my God, like, you know, they just solved the war. And so now it's off to the races. But the fundamentals coming into the year, the momentum, everything was kind of waning. And so, there's not a very good story for US equity indices when you look at them as just being Mag 7 and, AI tech related stocks. That's just what the indices are. um, it's not a great outlook without a lot of these newly presented risks. And so I think you're just getting this mechanical, uh, everyone's super hedged. So the market can't really break lower. And then there's the vol crushes and the mechanical buybacks, but nothing to really push it because no one actually wants to be, the last buyer up at the highs. And then we fall back down and then it's the same thing. Felix, if you go to slide 39, there's this good chart from BAML that shows how the K-shaped economy is still very, very persistent. So the higher income wage growth is booming, or at least continuing to do well, and just a very clear trend in the lower middle. And this is very similar to the overall jobs data as well, where the small and middle income and business size sectors have been struggling. If you go to 44, this is another I like, that shows consumer kind of, it's running on fumes, where this consumer spending is rising, but personal income less transfer payments is basically flat for a year now. And so this also aligns with the trend in saving. So saving rates are falling, meaning more and more people are relying on wealth effect. So
Did you hear that 401k? People are like emptying their 401k.
record, yeah.
Yeah.
So you have this where there's so many factors coming together at once, where um, the buybacks are leaving the market from the Mag 7. You have people spending down and relying more on equity and portfolio gains at a time when valuations are at highs. Even I was looking at some metrics, consumer staples, and value, growth versus value uh, parts of the market are at the highest forward price to earnings multiples since 1999, when the whole market was in the bubble. So like, there's just no safe places to hide anymore. And that's sort of like what, these difficult periods in the markets are made of, because at some point that record low cash level is going to matter. Everybody's been playing hot potato from rotation to rotation, thinking, because dispersion's been very high and correlation low. But where I think that the lasting buying opportunities come is after you see some more correlation to one type experiences in the market, because there's still pockets that have not been properly flushed. And it started with crypto, then it went to software, and we've seen some with metals. But I just think there's a lot of supply to still be worked through, and it's going to take some time.
This episode is brought to you by Coinbase. If you're a long-term crypto holder but don't want to sell your Bitcoin or Ethereum, Coinbase now offers crypto-backed loans powered by Morpho. You can borrow up to $5 million using Bitcoin or $1 million using ETH as collateral, all at competitive rates, typically between 4 and 8%. There are no credit checks, loans originate in seconds, and you can repay anytime with no fixed deadlines. The USDC liquidity can be used for things like a down payment, refinancing high interest debt, unexpected expenses, or anything else life throws at you. Importantly, Coinbase does not treat borrow transactions as taxable events, and over $1 billion in loans have already been opened through the platform. If you want liquidity without selling your crypto, click the link in the show notes to learn more and get started today. Before you place a trade, you should know who is actually moving the market. That's where Arkham comes in. Arkham is a crypto intelligence platform and exchange that lets you see real on-chain data, which wallets are buying, selling, and moving funds, and then trade directly on that information. Arkham was built to make blockchains human readable. Instead of raw transaction data, you get clear profiles, visualizers, and custom dashboards that show what's really happening beneath the surface. Tracking wallets and fund flows is becoming just as important as technical or fundamental analysis. On-chain intelligence is also one of the best tools traders have to protect themselves against hacks, rugs, and scams. With Arkham Exchange, you can go from insight to execution in one place. The world's first exchange powered by crypto intelligence. Check out Arkham and start trading with real on-chain insight at arkham.com. Yeah, I think there's just so many people so offside on these certain narratives right now too. Like the one you're talking about, Tyler, about the economic reacceleration, which we've been talking about, and you can see like just the pricing of cuts. Now suddenly we're not getting a cut until September. That's just been a huge reversal.
Yeah.
What are you gonna say, Tyler?
Well, I was just saying, growth always looks good at the end of the cycle as well.
Yeah.
Where you're like,
Yeah. I mean,
oh,
I think, was it last week we talked about? It's just like,
yeah,
caveat, this could also be end of cycle. Like it
yeah,
may look the same in the early phases, and like if you get a big oil shock, that is one of the biggest like ticking of the boxes for a recession.
yeah. And so you might have to refresh the slides, but I got one last great one, slide 59.
Okay.
This is the S&P average S&P average stock, their 3-month realized volatility versus the index volatility, which is like this is like literally one of my favorite stock or favorite charts from Goldman. And look at where it is. It's at the peaks. So your average stock is moving a lot more than your index, right? But what happens last time you've seen this, is 2009. There was a gap in that, and I think really it's such late cycle behavior because I think you have retail playing with call options. They playing with put options now. They're really they're really long puts, which increases the overall volatility in the market. And we'll see if it's a move like 1999. I don't know, but either way, this is like highly late cycle behavior. And with the credit spreads, with the global geopolitical angst, like what happens at the end of like global growth cycles, you have global geopolitical conflict, right? And not only that, but you also have like, massive CapEx from the tech leaders, which is like exactly what happened in 2000, the blow off top when you had like this giant supply of capital just funds it, expecting like, infinity growth. So I'm a little bit, I'm very concerned that if you get a credit, one of the other interesting things is like Oracle came out today and they said,
I was about to bring that up. Yeah.
yeah, you could talk about it.
Yeah. Just that basically we've been talking about the whole CapEx thing and especially how risky Oracle was. And there was a headline coming out that they were going to lay off a bunch of folks to basically fund their CapEx. And it's like, it doesn't get any worse than that.
Yeah. Yeah. And look at this is go to slide 49.
Yeah.
Sorry, I'm loaded with
No,
charts.
yeah.
CIOs telling CEOs to slow their CapEx. So like clearly the spend has been like astronomical, which I don't know. We'll see if it can keep going, but Trump might screw himself here.
Well, this chart is actually hilarious because it says net companies. Again, the market is all AI, and the boom in CapEx and anything in the economy is AI. So what is this chart? You should just replace it with this. I love this chart.
Yeah,
it's semiconductors. See ya. Like this is one thing. This isn't Main Street. They're fucking dead and left behind. This is AI CapEx boom. I mean, the rest of the market's starting to pick up a little, but the other.
Well, what's okay, go ahead.
I was switching to bonds. If you want to go there, if you have,
I want to say I want to talk about one more thing about the LNG situation, and then let's go into bonds because I do want to tie in the bond. But I wanted to bring up the LNG situation because it's so tied to this AI capex of natural gas is going to be one of the big, funding drivers of the energy that's needed for this build out. And what we've been seeing is that I think a lot of the attention right now is on oil markets for the Strait of Hormuz, but I think there should be a lot more attention on what's going on with the LNG market and the natural gas market because 18% of commodity flows out of here are LNG related. And specifically Qatar's LNG exports are a huge driver towards Asian markets. And the Qatar LNG complex has been offline since March 2nd now. They got hit. And so to your point, Tyler, you mentioned Anas Al-Haji. This is from a report they just put out. and he was talking about how that's going to take multiple weeks just to start to restart production again. So it's not even that we have these LNG transportation freights that are stuck and can't go past the strait, but they're not even producing right now. The LNG facility is offline at Qatar. It's been hit by drones or missiles or whatever it was from Iran. So this is, I think, where there could be a lot higher risk than what we're talking about with oil right now, and that feeds directly. Like, if yes, this is going directly to Asia, but it's going to lift LNG prices across the globe, and that feeds directly into the AI build out costs of these capex, and you kind of see the sequence of events here.
Yeah. There was another thing that guy said, the professor, he said, if you can hit these water desalination plants in you know Dubai, and it will knock out the city for God knows how long, because that's all that keeps, they only have like a week's worth of water. So there's a lot of weird supply chain things in the Middle East that we don't think about that could really derail the global economy. And the tail risks are absolutely enormous, just like this.
The LNG thing, I was tweeting about this too, because I was actually getting super bullish on natural gas names pre-war and waiting for and stocking them close to buying, and then we get this and they still haven't moved. I think I'm very long, but the one of the bull catalysts is you have this rise in, everybody knows about it, but LNG export capacity in the US, we're super flush with natural gas. There's endless amounts, and we just have been slowly developing an ability to export it globally. But because of the rise in LNG exports and trade globally, all of these countries that are short energy in Europe, Japan, South Korea, etc., they've been running basically not record low, but maybe record compared to the size of the economy, and it basically lowest inventory levels since the 2022 Russia-Ukraine invasion. So there's so many things about this that rhyme, and if this lasts any prolonged period of time besides a couple days, these these countries are very offsides, and electricity is already the number one component of CPI and inflation measures around, not just in the US, but in Europe and these other developed nations. And so it's a political hot button as well. So it's I think it's really bullish for that sector. And the other ancillary things are like coal, which, once prices rise, people switch to lower cost things, and wheat and agricultural goods too that rely on these fertilizers flowing through the Middle East.
You know what is one of my theories is the most ironic thing is always the outcome. And one thing that Trump could do during his first term was complete centralized bullying of the stock market through policies, et cetera. And he started doing that too. And one interesting thing they floated yesterday was like, they said, we're going to release the SPR and we're going to figure out naval vessels to accompany people through the Strait of Hormuz, and also replace Lloyd's of London's insurance that they usually put on oil tankers through the Middle East. We're going to do it as a country, and all those things were just completely discounted. And
because everybody knows Trump just is he just spews bullshit and never it's.
Well, normally you'd see like oil get faded off something like that, or an SPR release.
It does for like an hour, and then people are like, "Oh wait, Trump can't do that."
Yeah, but even then, the oil market's still priced for complacency. It's still priced as if this resolves itself pretty quickly.
Yeah, to a certain extent, it's still going up consistently in a straight line, and I just think that's a sign to me. It's not trading like Ukraine, where it was a bloop and back down, and the vol controllers are having problems being vol controllers, which is a central. Maybe this is the blow off top of centralization, is what I'm saying. Is like, if you think you can control everything, and that you inevitably life comes back at you and bites you in your ass. And I think this is, all these things are colliding at the same time, because it's global war when or war when most US people don't necessarily want it. You have all these incentives colliding globally at the same exact time. And it's just, it feels to me like the end of we're watching the end of some sort of global hegemonic power unwind. And it has a lot to do with ego, right? Like, because you're forcing it when a lot of people don't, and you'll force other people's hands. Like, what happens if China takes Taiwan? Then you're caught in World War III. It is really what it's looking like to me. And it didn't have it in the beginning of the presidency. It looked like he was kind of copacetic and rewriting some sort of social contract for the globe. And now it seems to be devolving.
Big time devolving.
Yeah.
I think that's a good segue into talking about the whole bond thing, because I think it's really showing that this is like directly a different situation than previous geopolitical events. And to your props, Quinn, you've been calling for this. Is that like, look, when Iran gets hit, bonds are not going to act the way you hope. They're not going to be that safe haven. And we've seen just a pretty significant sell off in bonds. People have wanted dollars, but nobody wants bonds. So I've been doing some back testing on this, and you can see like the first couple of days since the strike has been, typically what you see is this major rally in US bonds, the long end bonds. And you see this, just flight to safety, safe haven type of rotation. And it's been the complete opposite this time. We've seen a pretty substantial sell off in the US long bond. And you can just look at it compared to previous historical geopolitical events. And typically what happens is that, yeah, you get, certain increase in price and of oil. And of course that is inflationary, but still you get this flight to safety, safe haven rotation in bonds. And you can see that's been a tried and true correlation for multiple instances now over decades. Even ones like, the Russia-Ukraine war, we did see a rally in bonds, even though that was post 2021 and inflation. But this time, you look in the top right of where around is we've had this major sell-off in bonds. So I think you can see it. This is different. Like, it's not just our feeling or our vibes. Like, there is this, like, the vol controllers are having trouble vol controlling if bonds are
Yeah.
selling off like this in geopolitical events. And that's really concerning. And even when you just isolate, like, obviously the lead up into this move, bonds are rallying off, people were saying is because of like this AI fears or what have yous. But even when you just try to isolate for that momentum, it's still like a very significant sell-off in U.S. bonds relative to historical norms, which is where it's typically this rally. So, yeah, I mean, props, Quinn, you called this out pretty nicely. So I want to hear about how you're thinking about this thesis right now.
Yeah, well, just to tie in real quick, one thing Tyler pointed out on that single name volatility chart, I was just pulling up the deficit to GDP, if the last two corollaries of this trading regime was 1999, 2000, and 2007, 2008, the deficit to GDP in 99, 2000 was 2% surplus, and the deficit to GDP in 07 was 1% deficit, and we're at 6. So you're looking at I just can't for the life of me understand, like, the regime's been the same for 5 years. Since 2021, bonds have not worked. And it's been the same thing. And it's been highlighted, like, the market's been hit over the head with this Liberation Day, this, like, time and again, that bonds are not a safe haven. 2022, like, it hits you over the head every single day. Like, why do people keep rushing into bonds when inflation's done going down? They're continuing to use every trick in the book. The Main Street economic data is actually like heating up. So let's just say the war ends, and then you get a demand pickup because oil and commodities are flowing again into already increasing capex in Main Street. And so growth increases. And so all of this, you have, meanwhile, bonds yields are trading like 4%, which is below our deficit level. It's below nominal growth levels. I just can't for the life of me understand who would buy bonds. Like, the whole AI narrative, like, everyone just threw every single data point of the last 5 years out the window when they read this, like, forward-looking fiction piece. Props to Citrini that it got, like, that's like the most successful, like, research piece ever published. Like, grandparents are reading that shit. Like, but I just, for the life of me, don't understand how everyone just threw every single, fundamental data point out the window and bid TLT. And it just had this blow off top that was a lower high. And here we are. So, like, bonds, like, the other thing here too is you can't look at bonds and say, oh, well, if the war stops and everything's fine, bonds are a great buy, because they're not, because bonds have not kept up with the yields have not risen with the inflationary impulse of commodities and everything else. Like, they've been very tame. So it's just a lose-lose. Like, I'm not saying they're going to blow out here. So I'm actually short bond volatility and short bonds. But it's just ugly. Like, there's just no reason to own it.
This is probably a weird story, but that Citrini piece, that it caused like this ruckus because there's sort of like regime changes, and that certain things are changing. I remember in 2008, I was at working at this company called KBW, which is a bank that just covers banks. And there's a woman named Melissa Roberts who wrote this piece about how the entire banking system was undercapitalized. And it was like, I think it was 2007 when she wrote it. And immediately it caused like the biggest stir where people from all over were like, "Oh my god, let me get hands on this piece," because it was basically saying we were undercapitalized and heading into some sort of credit event. This was early in 2007. All the banks basically started, like, net charge-offs started going up from there. They started issuing, equity left and right to try and like stop this credit crisis from happening. And there was like seminal pieces and then you got Meredith Whitney posting about like all this stuff that started coming out after. And this whole transition to AI feels somewhat similar, where it's like new market regime, new narratives coming out. People are jumping on, things and trying to like grasp what reality is like. At the same time, it's just like this giant capex boom and private equity bubble that's kind of unwinding under the surface. And I don't know. I think it's time to pay the piper, but
Yeah.
it's really easy for the government. It's been easy for the government to paper over these things. So I might change my mind if we see credit tighten or credit spreads come down and bond yields come down. But like you said, Quinn, at this point, it feels like a generational change where the finances are so bad from every single angle. The only thing that's not like completely miserable is the consumer balance sheet is like somewhat delevered, but they're half of our economy, people can't even pay next paycheck. So there's just like, it's completely imbalanced. And I think all these things it's coming home to roost.
I just don't know where you hide out right now. Like, gold is going to get whacked if we see the dollar rally. Bonds are cooked. Equities, yeah, like there's just endless minefields that we've been talking about.
You go for
We've
liquidity.
seen,
That's
yeah.
where,
I mean, that's just dollars. I don't know.
well, I think that's why treasury yields might actually eventually go down, just as like,
Yeah, you'll get
but
the crisis move, and then bonds will rally a bit.
But on the but on the front end, not the back end, like,
yes,
everyone knows what's coming. And so we're entering this period where you need to sidestep the bullshit. We know what's on the other end. What's on the other end is going to come, which is going to be intervention from policymakers. But just like Liberation Day, like I wrote this week, I said, watch oil, watch nat gas, watch commodities, and watch bonds for the tacos. Don't watch the equity markets, because the meters here that will influence pivots in policy, like the Fed can't do anything here to just put liquidity into a commodity crisis. This is like Liberation. This is like COVID once again. And so you have to watch these other markets that instigate an attempt to pivot from the fiscal White House side. But unlike Liberation Day, where Trump can just tweet, it's over, you just killed their top 100 leaders. So when you want to negotiate, I don't even know who you call. And now you have this whole religious war, death to America, and basically just, I mean, raising hell. It's just, you've instigated, and like, there's a real thing in fighting wars, which is, your will to keep fighting. And we how politically untenable it is to put boots on the ground there. Like, I don't think that's out of the question personally, but I think, it would be the start of the end of the war in terms of our success. But if you're Iran, you want American boots on the ground, because it's a very difficult terrain to fight. It's mountainous. You can, there's a lot of advantages, and you just riled up 90 million people. Like, the average Iranian, like, they might have hated their leader, but when has the US ever done anything good, nice, or positive to a country we've invaded in the Middle East? Like, you might hate the guts of the guy, but we've leveled and destroyed and never helped any country we've come in and invaded. So I don't think it's all as sanguine as, like, Trump's like, oh, we can end this war whenever we want, and Hegs is saying we're going to finish it till the end. And it's
The best case scenario is like you have, a very quick, you get in, get out, you everything stays copacetic in the Middle East from that point on, and things go back to normal, which I don't know. I feel like the Maginot line is crossed. I'm not a geopolitical expert, but could you imagine if they put boots on the ground? I think that would be the generational fourth turning, where, like, I think the boomer neocon thing would just be over, and I think the next generation is just sick of endless wars, and you can kind of feel it in our next generations that, like, no one wants this stuff, and most of it's just, if I'm being completely honest, in hindsight, they haven't given us a reason to trust the government. And like, this whole thing with, first of all, the Epstein files, and then you followed up with this vote in Congress about the sexual assault, was one of the most egregious things. Is like, oh, we're being led by a bunch of pedophiles. It's like the only way you get up in society is people have to have compromise on you to essentially, like, and that was just the nail in the coffin for me. It's like, this is the generational turning point where people are just fed up with,
I mean,
whatever incentives brought these people into power will unwind.
I mean, it's a good reminder that this is all happening in the lead up to midterms right now, and, like, this is a very politically unpopular policy decision. Like, the Republicans are already cooked in the House, and now they might be cooked in the Senate too. Like, they could get steamrolled if boots go on the ground and they're still fighting in 3-4 months. Like, I don't even know where these odds are going to be.
This is why our listeners need to understand that, and everybody, that it's a political elite class versus everybody else. It's not a red versus blue thing, because in all these votes, the Epstein stuff, it was covered up under Biden, it's covered up under Trump. All this, people implicated are red and blue. The people who voted for not releasing sexual misconduct in Congress are red and blue.
Bipartisan.
It's the number one thing that these guys are going home now at night and saying, well, at least, it's a shit show and we're losing, kids' lives over in the Middle East again, and no one likes it, but at least they're not talking about Epstein files anymore. They're talking about, defending, US hegemony. And so it's just another, arrow in the cap of how, we need to stop the infighting, between parties and people, because it's the anger needs to be directed towards our policymakers.
I really don't know how it shakes out without a new party. I thought the Democrats were going to break apart, a couple of years ago, because they were splintering. Now it's the Republicans, and there's just no home for your average, like, pretty moderate person anymore, who just doesn't want, who wants basic American things. And politics are just going to splinter here demographically, and as soon as the boomer vibe goes out, it's incredible. This is a side personal note, but my mom here in town, and she only watches, like, mainstream news, and it's kind of incredible how, like, she doesn't even know both narratives. Like, she can't tell you, like, real things, because there's no real information getting to boomers. There's a couple that watch, podcasts, which I love, but en masse, I think it's really hard to break through that until there's a demographic turnover.
The thing that I and it's too early to say one way or the other at this point. But probably the biggest question for the Trump administration that I have at this stage is, why did you spend all of 2025 berating the Fed, pumping liquidity, juicing markets, using every tool in the toolkit to pump, grift, scam,
Yeah.
everything's markets, only to then be out of any tool and just blow it up in the 10 months before the midterms at a time when you need, positive reviews and approval ratings the most? They totally, one, it's hubris, it's greed, it's just overconfidence because, Maduro went well because we captured a guy in a country of 30 million people, 100 miles from our country. So we think we can go dismantle a 90 million population regime on the other side of the world that surrounded by countries that hate us. Like, that is ludicrous, like hubris. But it's just wild. That's the biggest question I have is why did they go so gung ho, pumping markets, pumping liquidity, getting the Fed to cut all of these things in the year before the midterms, and now they're just absolutely shitting the bed this year.
It is like you wonder, is there like a plan here, or is it because it might devolve, but I don't know. What I think they're going to probably try and do is, just we saw Bitcoin rallying and they're going to get the Clarity Act through. And I don't know, maybe they think a giant bull market in crypto works. Like I already saw Eric Trump talking about it and how banks have this monopoly. I mean, like you got to discount all this stuff, but at this point, the whole grift is up. I think even he's lost a lot of people, and I mean, it's just I don't know where it goes from here. I mean, it's feeling very, very like the ice is thin.
Yeah, it's tough, man.
The real life, market volatility metrics aside get skewed because you have hedging and all these stuff, but you can't buy puts on real life societal and political volatility. And so you don't have the decay and the buybacks, and it's
That's
only
my favorite
increasing.
quote. You can't hedge societal
Yeah.
yeah.
So as we get, it's you have a dot on the calendar of midterms, and you have everything trending in the wrong direction, meaning desperation increases, and force, might, and interest in affecting outcomes increases, and it creates some weird stuff. So I mean, to your guys' message at the start of the show, you don't. I think the money to be made this year is like 1 to 5 day trades and largely short bias. And if that's like 5% of investing community who actually wants to do that or can do that. And other than that, cash is probably pretty good, because if everyone's piled, even, the safe havens, gold and metals, where the Fed's not cutting and the AI CapEx boom is faltering, and there's a dash for near dated liquidity and currency, even those areas could be challenged. So it's
imagine we're
not
just
easy.
the contra, and we just marked the low right here.
Yeah, we're gonna get an announcement tomorrow morning that everything's hunky dory. And
yeah. By the way, we solved all the global issues, and he's meeting with Xi, and we have a new supreme leader. Everything's good. Oil drops. Market goes. AI turns out to be the productivity boom of the millennium. That is the
stuff.
Yeah.
Yeah. Hopefully we're wrong. I'd love for everything to resolve itself.
I will say this, I'm using Claude more and more, and it's absolutely like, I'm really nervous. This is our good commentary on institutions, but I'm so nervous about the new up and coming kids coming out of college, because I'm doing I could have 15 interns right now with Claude, basically doing.
It's insane. I use it so much right now.
Yeah,
I can just have 20 ideas I want to back test and do random regressions or what have you, and just do it instantly. It's insane.
So my social commentary is, I really do think colleges, the educational profession, needs a systemic rehaul. and maybe they're thinking about this in college and they're all becoming AI experts in college and they'll take all our jobs, which is completely possible. But there's a contingent of kids that probably are coming out with debt, and I I can't imagine being a high school kid thinking I'm going to go to college to be whatever at this point. Like, could you imagine what that feels like? Where, what industry do you go to right now? Besides, like, I guess you go to an AI
I think you
industry.
start a Main Street business that doesn't take a lot of expertise, and because there's no one's done that for years and years and years. Everyone's focused on financial markets, and everything's over financialized. And whether AI works or not, like let's say AI is the biggest success. This is my biggest beef with like all the doom pieces. If AI is the biggest success ever, and 10% of the workforce is laid off, you're going to need some like FDR style, like Great Depression,
Bridge
social,
building.
like, yeah, you're gonna have to put the people to work, and how that's going to be infrastructure and real things. And
Yeah,
so it's a part of the market where everyone's been chasing financialization. And so there's not a lot of talent left in real things, that you're going to have a flood of money going towards real things. And if
yeah,
you're a first mover towards that, markets have a beautiful way of, the invisible hand is the most powerful and oftentimes correct force out there. And
yeah,
we think we run everything and tech bros control everything and we live in this separate world. But the invisible hand's been around for eons, and
It's the wealth of
it
nations.
fixes a lot.
Yeah.
Okay. Last philosophical thought is, I don't know if you saw this, but Eric Weinstein's been talking about this a lot, which is like how science basically took a turn, and then you had a lot of these like scientific journals. It was about publishing, and things became less about breakthroughs and more about just like how many things can you publish, right? And it was the whole professional science was completely perverted. And I think at the same time, where you know Thiel and Eric Weinstein are buddies, and they talked about how we left after Woodstock, there was secular stagnation in real things, right? And now maybe what we're really watching from a macro perspective is the blow off top in bits and a reemergence of like investing in atoms, like real things that change the world, like nuclear and space, et cetera. Like, I think that's really what we're watching here, and AI is just the commoditization of a lot of software, right? So we're watching all the capital that went into this thing we saw the blow off top of it, and now that will help rebuild real things for the next 20, 30, 40 years and make them more efficient. So that was my thought. But my point on the Eric Weinstein thing is the fact that we're aware of why we now moved. We just went to bits. We kept innovating in bits for that whole period of time, and now we realize, oh my God, we're gonna have to reinvest in real stuff. So I don't know.
Yeah.
What do
I
you
like
guys
that. Dude,
Yeah,
atoms. We're short
I
atoms.
agree.
Yeah.
I think there's a lot of optimism to be had. I mean, the war and stuff sucks, and that's just not good for anybody. But in terms of the whole AI productivity, I think it, for all the doom that's out there, it's also at the same time never been easier for someone who's on the outside of some of these walled garden gated, communities, Wall Street, big tech. Fire up a Twitter account, fire up an AI agent, and you're off to the races with the same tools that everybody else has. You don't have to go spend years in the mailroom on Wall Street trying to break into this niche community that's super gated off from the average Joe. So I think the opportunity, if you look at it that way, has never been, the playing field never been more level, because AI is democratizing intelligence. But maybe there's a shortage of attention spans, ability to delay gratification and ambition that needs to be addressed. But you can learn that, you know.
You can relearn it, I think.
You learn it.
That's it, hopefully.
I'm
After
gonna leave it there. Yeah.
scrolling for 20 years.
Yeah. Yeah.
Yeah.
Exactly.
Yeah. Take your
Sweet,
brain out of
guys.
the microwave for 5 minutes, spend
Yeah.
it, outside. And
Maybe
do the
there's
work.
hope. Maybe there's
Yeah.
hope. You know what? On that note, there was a viral tweet that said, they took this away from you, and it was like it was a bunch of kids riding a bike down a street together, and I was like, I still have that. I still have that in Texas, which is kind of dope. There and like I don't know. I think there's going to be a reemergence of a lot of like social things. I'm bullish on like real human interaction going forward.
Same. Super.
Love it.
Super bullish.
Yeah.
Sweet, guys. Good
stuff, boys.
Monitoring. Yeah.
Yep. We'll be doing more monitoring.
Yeah.
That's why this week felt so long, because we were just on Twitter all weekend watching bombs and shit.
Exactly.
I think I'm going to do the slick back hair thing next week with you guys.
You should.
Get one of these things going too.
Look at that John Cusack. Look at this.
Wow. Damn. All the ladies in Canada just.
Yeah. I'm hitting end here before I start blushing.
Yeah.